The New Zealand dollar hit a 26-year high against the US dollar yesterday, its highest level since it was floated in 1985. New Zealand reached a lofty level of 82.16 against the US dollar. The reason for this all started last week when it was announced that Asian nations, particularly China, were really starting to purchase New Zealand bonds quite strongly. Also, China announced that they were expected to invest about 1.5% of their GDP into New Zealand assets. Overnight, the US Dow Jones index was actually on holiday, so there was no trading there. However, market sentiment was dominated around the pig nations from Europe. Greece is really struggling against a mountain of debt at present, and their government yields once again increased overnight. A few key pieces of data out yesterday helped our currency move into its very lofty conditions. Yesterday, our April exports were announced, and this was $1.1 billion trade surplus. The expectations for the trade surplus was only around 600 million, so it was much stronger than expected. Once again, the farming sector really led the export-led recovery. Dairy prices and sheep and beef prices have been very high recently. Volumes of dairy were down slightly, however, red meat volumes were up slightly over the last 3 months. Also out yesterday was New Zealand housing confidence and price expectations. It appears that the 50 basis points drop in the official cash rates has really led to house prices increasing due to the purchasers believing that their interest rates will be cheaper for a longer period of time. As pre-mentioned, beef prices continue to hold up at very good levels. The warm, wet conditions have really increased store cattle prices over the last couple of months. This is due to the fact that the grass is growing better than expected for this time of year. Over in the US, very dry conditions in the southern plains has increased the amount of cattle going on to feedlots. This is quite unexpected, and this trend is happening much earlier than in previous seasons. It is likely that this will increase the supply of red meat over the short term. However, due to the fact that this red meat will be more costly to produce for US producers, it is likely that supply into the future will dwindle somewhat. Demand around the world continues to outstrip supply, and over the next couple of years, it appears that the increase in corn prices will really inhibit US producers from producing more meat. Also, the low US dollar has increased the amount of exports recently from that nation. Back in New Zealand, we expect beef prices to remain quite solid over the forthcoming season. However, our currency being as high as 82 cents will put some headwinds into prices for next season.